I've been hearing about excess of loss reinsurance, but I'm not fully sure how it works. Could you explain it with examples?
Absolutely. Excess of loss reinsurance is a form of non-proportional reinsurance where the reinsurer pays only when the insurer's losses exceed a set limit, called the retention. It protects insurers from large, unexpected losses.
So, the reinsurer doesn't share in all the losses, just the ones that go beyond a specific point?
Exactly. Let's say an insurer has a $5 million retention on property insurance. If a claim comes in for $10 million due to a fire, the insurer covers the first $5 million, and the reinsurer steps in to cover the remaining $5 million.
I see. So, the insurer handles smaller, expected losses, while the reinsurer covers the larger, more unpredictable ones?
Yes, that's the idea. It helps insurers manage catastrophic risks without overexposing themselves. This is especially useful during natural disasters, where losses can quickly escalate.
Could you give another example from a different type of insurance?
Sure. In motor fleet insurance, if the insurer has a $1 million retention per accident and a major accident leads to $3 million in claims, the insurer pays the first $1 million and the reinsurer covers the remaining $2 million.
So, excess of loss reinsurance helps insurers manage large, unexpected losses across different lines of business.
Exactly. The retention can be set based on the insurer's risk appetite. Smaller insurers may choose a lower retention, while larger companies may absorb more risk.
Does the reinsurer also set a limit on how much they'll cover?
Yes, there's typically a coverage cap. In the property insurance example, the reinsurer might cover up to $10 million beyond the $5 million retention. Anything over that would be the insurer's responsibility.
How is this different from proportional reinsurance?
In proportional reinsurance, the reinsurer shares both premiums and losses from the start, based on a percentage. But with excessive loss reinsurance, the reinsurer only pays when losses exceed the retention limit.
It sounds like excess of loss reinsurance is crucial for managing major events, especially in high-risk industries.
Exactly. It's widely used in sectors like property, marine, and aviation, where losses can be unpredictable and substantial. For instance, if a shipping company faces a $20 million claim and their retention is $5 million, the reinsurer covers the excess, protecting the insurer from a huge financial hit.
How do reinsurers assess whether to offer excess of loss coverage?
They look at the insurer's loss history, types of risks, and financial strength. They also evaluate the frequency and severity of past claims to set the right retention and coverage limits.
So, reinsurers carefully assess the insurer's risk profile before agreeing to cover the excess?
Exactly. The goal is to protect both the insurer and the reinsurer. The reinsurer takes on high-severity risks, but only after the insurer handles the lower-severity ones. It's an important partnership, especially for managing catastrophic events.
I understand now. Excess of loss reinsurance allows insurers to cover large, unexpected claims without endangering their financial stability.
That's right. It's a vital safety net, helping insurers confidently cover large risks, knowing they have protection for the worst-case scenarios.